right, welcome to another episode of Ardent TV. I am one of your hosts. My name is Thomas Draplin, and I have with me this guy.
Joseph Icardi. I'm the principal broker here at Ardent Mortgages, ready to jump in on that cue from Tom, as always, just itching for
Bang on. No delay this time.
No delay.
We're professionals here.
So what are we talking about this time, Tom?
We're talking about common mortgage questions, and we're going to answer. This is going to be Mortgage 101.
Okay.
So
I'm not going to look down at that piece of paper because I think it contains the questions and the answers.
Don't look at the answers. This is a test. I'm going to ask the questions. You're going to answer them as best as you can. And then we're going to grade you at the end of the video.
Style. I like that. Let's do that.
And in the comments.
And in the comments. Do you have your pen to make?
Yeah,
All right, let's do it.
I got my notes. Okay, so how do you qualify for a loan?
How do you qualify for a loan or a mortgage?
A mortgage.
A mortgage.
Always in the context of a mortgage. How do you qualify for a mortgage? Simple. Make it easy for us.
All right. So I would say the best answer to that is with the 5 C's of credit, and you're really putting me on the spot for this. So it would be credit, character, collateral. Where are you looking?
Crunchiness.
Crunchiness. No.
That's not one of them.
Credit, character, collateral. So let me relate it
Capital.
back. Capital, thank you. And okay, let me relate it back to mortgages itself. So credit is your credit score and everything to do with your credit. So that's one. The LTV is the next one. So that would be your collateral. Did I say collateral? Is that the last one?
You did say collateral.
Okay,
yes.
Collateral. Write these down for me. So collateral would be the property, your capacity and ability to repay.
There's your fifth.
Which is your GDS, TDS. Your character, which is the story behind the whole thing. Can you recite what I have so far? I think we already have the fifth one.
I think so. Character, collateral, capacity, capital.
Character, collateral, capacity, capital, and credit.
Credit.
Yeah.
5 C's of credit.
So that
unironically contains the word credit.
Yes. So those are the 5 things that the lenders will look at before they issue the money. Can you repay it? Does it debt service, which is repayment? Can you? Is it within our lending limits for the loan to value on the home? Is there a story that makes up for any sort of issues that may have come up on the credit, and is the credit worthy itself? And then whatever I missed on that. Is that did I pass the first question?
No, I think that's a.
That was a vague and difficult first question. I wish I cheated and looked at the questions.
Well, that's okay. That's a fine first answer. Okay, so question number 2. Can you get a home mortgage loan without a credit score?
Yes, you can, but I don't want to talk about this. So yes, there's private mortgages out there that will.
I'll chime in. There's a part in here of that.
So there's a couple answers to your question. When you say without a credit score, do you mean as a beacon reject or no or credit reject? There's alternative lenders that will lend to you.
Well, let's explain the difference.
The difference between?
Yeah. Between the 2 options. So you said beacon reject or no credit. Like you have nothing on file.
So there's not much of a difference between the two. A beacon reject is or no bureau is someone who doesn't have any trades reported to the bureau for the last 7 years. So
okay, so the scenario is I had credit cards, I had some debt, I paid it all off, I haven't used anything in a long time.
7 years.
I have nothing. I have no credit.
So yes, there are lenders who will lend to you in that capacity. Okay. That's my answer. Can I just answer like that?
I guess that's fine. I guess the question was
specifics?
The question was, can you get one? So if you just say yes. It is possible. It's a little more complicated. You have to do some more work.
There's private lenders who can do the deals. There's institutional alternative lenders who will do the deals. There's institutional alternative lenders who will do the deals and get you a line of credit to help you rebuild your credit. So, yes, if you fall in that category, we can help you, and there are other people out there that can help you as well.
Okay, that sounds good. Question number 3. What's the difference between being pre-qualified and pre-approved?
You're really going with the fun questions today. So it's...
I know we don't generally deal with this particular area as often as some of the other ones.
Yeah, we work with a lot of credit rehabilitation, so pre-qualification and pre-approval. A pre-qualification is just you go to the bank or the institutional lender, and they look at you and they say, yes, you have a heartbeat, we can probably lend you money. They take an overview of the whole situation,
broad conversation,
yes. And they say, oh, you make some money,
you have a job, and you can
you say you have a down payment, yes,
we'll probably give you a mortgage.
A pre-approval is they actually approve you and qualify you for the mortgage. Ironically, the qualify is so they actually take all your information. The wording,
the way we name things in this industry are not always the best and most descriptive.
So yes, for pre-approval, you're actually sending all your documents into a lender, and they're actually crunching it. They're underwriting it on their end, and they're spitting back an answer with an actual interest rate and a dollar amount that you can purchase.
Perfect. I like that answer. Okay, so this one's also a little more subjective.
Oh, man.
How much home can you afford?
How much home can you afford?
Yeah.
Who wrote these questions?
These are very common questions.
These are very common questions. Okay. How much home can you afford? That depends on...
What is it? Yeah. What are the factors?
The qualifying factors that we talked about in question 1, the 5 C's of credit. You can afford as much as your income and your down payment allow.
Well, I suppose the question then would be, how much home should I afford? Should I go for?
That's not the same question at all.
No, it's not.
It's a completely different question.
Because this one's very like, well, how much home can you possibly?
Yeah. So
what's the biggest mortgage I could possibly?
So what you can afford and what you should afford are two. What you should afford is 100% subjective. If it depends on your risk appetite, it depends on.
What are some guidelines?
What are some guidelines? Well,
how much should let's just say this. How much should my mortgage payment be compared to like my monthly income?
Sure. What other debts do you have? Do you have a Mercedes-Benz that's costing you $1,000 a month to drive a car? You have nothing else.
Nothing else.
Then my advice, but this is my advice, would be put as much as you can into the home. If you have no other liabilities, you can afford what you can afford in the house.
Okay.
But it's not a one-to-one or scalable or even answerable question when you're looking at different scenarios, because everybody has different ideas as to what they want to, what their style of living is like.
Sure.
Okay? So if you want to go out for dinner every night, probably don't put all your money into the home. If you can live off of as little as possible, absolutely invest in your home, which is going to be the biggest appreciating asset that you can.
Yeah, if you want to live a Spartan lifestyle and you want to put everything into your house,
so subjective of a question.
You can do it differently.
The only way to answer that question is to actually break down all the components of somebody's spending and habits and lifestyle,
their unique situation,
and apply it to which we can do, but not in a general sense.
Not for everybody over the internet on a video.
I have to start screening these questions. Let's go.
Maybe
on.
next time.
I think so.
For now, we're going to keep going. So question number 5 is, how much should you save for a down payment? Should you save for a down payment?
How much should you save? At least 5%. That's my answer. Let's move on.
Just 5%?
At least.
At least? Well, I don't think you can do much without at least 5%.
Okay.
But what do you recommend?
You're going to give me these types of questions. I'm going to give you, the more you can save, the better.
Okay, that's a good answer.
That's my answer.
100%.
And at least 5%.
100% down.
Yeah.
Question number 6. How do you know which home mortgage option is right for you? So this one is, how do I know I should get a fixed versus a variable versus an adjustable? How do I know what's the best for me right now?
My answer to that again is going to be hope that your mortgage broker asks you the appropriate questions to figure out what your needs are.
Okay.
So variable rate mortgage is nice because the penalty to get out of it is only 3 months interest.
Okay.
Which is fantastic. You can lock it in at any time as well. 5 years ago, I would have recommended a variable rate to a lot of people. Rates were rock bottom, and they weren't going to go further down. So it's actually subjective as well, because rates were rock bottom, so you may as well lock in for the 5-year term, but it depends what
you can make the reverse argument. They're not going to go any lower. Yeah. So maybe this is a good time to make sure you get that fixed position and be like, I'm not going to just in case they go up, I'm going to stay here.
But again, if you're looking at it over a 5-year term, and you have to look at the whole picture, because a true variable rate mortgage, the payments aren't going to change over the term. So you lock in a variable rate 5 years ago when rates were at 2.5, let's just say 2.59.
Sure.
You're looking at a variable rate of less than 2%, right?
Yeah.
That's amazing. You're virtually paying no interest. Like it's next to
It's
nothing.
almost zero. It's pretty
Right?
close.
So
Historically, it's as low as it's ever been, right?
even if rates go up, well, your payments are going to maintain unless you've got an adjustable or an ARM, adjustable rate mortgage,
Yep.
ARM. Then your payments will increase as it. So it depends on the situation. But
So
again,
then,
yes.
sidebar here. Why would you, now that we know what the difference between a variable and an adjustable rate mortgage is, why would you go for one or the other? What's the pros and cons?
Well, it depends on the product that you're looking for. For example, well, a lot of the lenders don't offer true variable rate mortgages. They're mostly ARMs. So that's number one. Number two, line of credits are all ARM type mortgages. They're the payments are gonna fluctuate with the interest rate. So you look at the situation that best suits you. So for example, I'll talk specifics. When I bought my home 5 years ago, 6 years ago, 5 years ago, something along those lines, I was intending to pay off the mortgage a lot faster than the amortization of the mortgage, but I also wanted to keep my monthly costs as low as possible. So what I did was I got a portion of 50% of my mortgage was a conventional fixed rate mortgage where I had a prepayment privilege on it, and then 50% of it was a line of credit at Prime, I believe it was Prime at the time, through TD. And with the line of credit, it was fully open, so I had the opportunity to pay it down, and I did, and that was the whole idea behind that. But that was because I understood my specific situation, and the same thing applies for any first-time home buyers or any home buyers whatsoever. It's very important to understand the products available to you to make the right decision, and truly understand what your options are. And that's the only way to answer that other question. Let's see what the next one is.
Sure, that seems fine. I like that answer.
Sure.
Question number 7: how do mortgage rate trends affect your home loan?
How do mortgage rate trends affect your home loan?
So this is a question of rates are going up. How is that going to affect my mortgage? Rates are going down. How is that going to affect my mortgage?
So
this could be. This is not a deceptive. This is not.
No, I know.
There's no hidden layers. This is really a very basic question.
So if you have
how does it affect me?
If you have a variable rate mortgage and rates go up, a true variable rate mortgage, your amortization is going to be longer. It's going to take you longer to pay off your mortgage. Your payments are going to stay the same. If you have an adjustable rate mortgage, it's the only way to answer this question, right? To go through each type of loan. So if you have an adjustable rate mortgage, then your payments are going to increase if the Bank of Canada rates or your mortgage rates increase. If you have a fixed rate mortgage, your payments are going to stay the same. However, on maturity of your mortgage, you're going to have to lock in for a new term at whatever the prevailing rates are. Yes. Did I miss anything? If you have a line of credit, it's the same as an adjustable rate. Your payments are going to increase.
Yep. And
if you have a reverse mortgage, no.
One of the points, though, is that you can't really time the market. The same thing as stocks. You can't really.
Does that answer the question? The question is,
how does it affect you? But yeah, you can't. Don't try and get in low because it's really hard to time it properly. And don't wait if that's what you're holding off for. That's not necessarily a good strategy. Right. And no one knows exactly what the rates are going to do.
Typically, when rates drop, prices increase, and when rates increase, prices stagnate or decrease or stay the same. So it doesn't. In the long run,
doesn't really matter.
You
should just, if you can buy, you should probably do it.
People are going to potentially argue on that point, but yes,
which is fine. I'm always open to some back and forth really feedback.
Comment. Yeah.
All right. So question number 8: what does your mortgage payment include?
Principal and interest, typically.
What else?
depends on the lender and the product and
Yes.
Okay, so
What could it include?
if you've opted to include your property taxes into your mortgage payment, then it would include your property taxes.
Yep.
Typically on the alternative side for lending, the property taxes are mandatorily included in the payments. On the A side, you like the bank rates, you typically, or bank mortgages, you typically have the option to pay your own taxes on the side. Some bank lenders, like Manulife, for example, will not take your property tax payments, even if you want them to. There, I think I've covered all of it there. Did I miss anything on your notes?
Insurance?
What do you mean insurance? Mortgage insurance?
Yeah.
Okay, so yes, some lenders offer their own mortgage insurance. TD, mostly the banks, First National, but again, so it can include the mortgage insurance, or which insurance are you talking about?
Well, let's talk about the scenario of what we were discussing in another video in the past.
Which
where,
one?
Yeah, one of them. Where you have 5% down versus 20% down.
Okay, so you're talking about CMHC insurance.
Yeah.
So that would be included as well if you have a high ratio mortgage. Understood.
It's good to know. It's good to know. Just curious.
These are very specific, vague questions.
Specific and vague. All right, well, the last one is what happens after you get pre-approved for a home mortgage loan?
You go shopping.
That's essentially what this is, too.
Is it?
Yeah, you go buy the house. You go look for the house to find the one you want.
Yeah.
So what is that situation? Somebody who's never purchased a home before. I want to go buy a house. I went through the whole pre-approval process, just like we talked about.
Okay.
What should I go do now?
So you got pre-approved.
I have no idea what I'm doing.
Or bank. You don't know what you're doing.
Yeah.
Typically going to go to a real estate agent and start telling them what you're looking for, telling them the dollar amount that you're approved for, and finding something within that
region or city.
Well,
or
so geography is important, but
range.
within the compounds of what you have outlined to the real estate agent that you're looking for. So price, type of home, all of that. I mean, nobody goes and says, I want to buy a house and has no idea what they want to buy, like, whatsoever. I want to buy a house. Okay, here's a car.
I want to buy a place. It's got 4 walls and a roof and maybe a door.
All right. Well, the realtor will love
Hopefully
you if you come to them and
find that.
say that.
Hopefully find that. Do we know any realtors we can
Absolutely we do.
we can tell our viewers about that maybe they should go talk to if they're in that situation?
Can we? I'll leave this to you. This is your department. Do you want to plug, or do we want to put a link, or?
Oh, we'll
I don't know
include a
what we
link
can and
down
cannot
below. But Aron Pinto,
Aron Pinto.
Team Pinto.
Mm-hmm.
If you guys are looking for a real estate agent, if you're in that pre-approval process and you're ready to go and you want to start shopping for a house, we do have a recommended realtor that you should consider working with, at least in the Kitchener market, Kitchener, Waterloo, and Guelph, Cambridge, blah, 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 blah. Right?
That's right.
If you want to reach out to them, they will be in the comments or in the description for the video down below. Anything else?
You ask me.
I don't know. Well, those are the 9 most common questions.
How did I do? You were supposed to grade me.
Well, that's a good question. How did you do? Well, the first one was a little bit rough. You had to ask me some questions based off the answers on that one. How much home from you before? Blah, 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 blah. Let's say that was a pass. I think we
Just
did
a
reasonably.
pass?
It was a pass.
60%.
It wasn't a home run. We didn't, crush it, but I feel like...
Next time I'm going to ask you the question.
I feel like it's pretty good. Okay, next time.
We should do that. That'll be fun. Oh, I have some fun questions for you.
I'll take a stab at it. That sounds like a good time. All right, well, those are the most common questions. If you have any other real estate mortgage questions that you want to ask us, feel free. Send us an email, give us a call, type them down in the comments down below, and we'll do our best to answer them. Maybe we'll do another video where we'll just compile all the questions and go through them again. It'll be Mortgages 102. We'll do a little more advanced on the next one. Well, thanks for joining us. We'll see you in the next episode of Arden TV.